Welcome to Crypto Prism's channel. Let's take a look at Bitcoin's latest market structure. On the 4-hour chart, Bitcoin is still trading within a descending channel. The upper trend line continues to act as resistance, and rebound highs are getting lower, indicating that bears are still dominating the trend. Price rebounded from the lower boundary of the channel to around the 68,000 area, near the upper rail and a dense trading zone, then printed a long upper wick. This is a corrective rebound within a downtrend, not a reversal. From a volume price perspective, earlier declines showed clear selling pressure, followed by a low-volume consolidation phase. Although this rebound came with some volume expansion, it still needs sustained volume to break and hold above resistance. Otherwise, it is prone to a liquidity grab followed by a pullback. Looking at the indicators, the MACD histogram is turned negative, and the fast and slow lines are converging, suggesting that bearish momentum is weakening, which aligns with a rebound correction signal. RSI is rising in the 55 to 57 range, showing short-term sentiment recovery, but not true strength yet. Key levels to watch now. Resistance is around 68,000, 570,000. If price cannot break above with strong volume, a pullback is highly likely. Support is at 67,000. If this level breaks, the rebound may end, targeting 65,000 with a potential extreme retest of the previous low near 59,800. Current core strategy. As long as the descending channel is not effectively broken to the upside, treat rebounds as weak corrective bounces rather than trend reversals, and be cautious about chasing longs. Only a high-volume breakout and sustained hold above 70,000, along with a break of the channel's upper rail, would signal a potential trend shift. Now let's look at the daily chart. Previously, Bitcoin dropped sharply from higher levels to around 59,800. After that, it entered a low-level consolidation and recovery phase, and the recent rebound printed a long upper wick. This indicates that bullish advances are facing strong overhead resistance. There's heavy selling pressure and trapped supply above, with funds more inclined to take profit on rebounds. This behavior is characteristic of a rejected rebound in a downtrend, not a true reversal. From the volume perspective, the earlier decline occurred with strong volume, while recent rebounds show insufficient volume. A push higher with volume but ending in a long upper wick often suggests distribution, highlighting significant overhead resistance. In terms of indicators, MACD has turned negative, and although bearish momentum is weakening, it still remains below the zero line, meaning the higher timeframe trend has not reversed, and the move is still a weak rebound. RSI is hovering around 40 and has not reclaimed 50, indicating limited sustainability of the rebound. The key resistance to watch in the near term is around 69,000. If price breaks and holds above it with strong volume, upward continuation becomes more likely. Support remains at 67,000. A breakdown could lead to 65,000. In extreme scenarios, a retest of the previous low near 59,800. Overall, the daily structure still reflects a weak rebound, with heavy overhead resistance and a bearish trend bias. Only a strong bullish engulfing move that absorbs the upper wick and holds above resistance would be considered a true reversal signal. Looking again at the 4-hour chart, Bitcoin has rebounded to around 68,900 but failed to make a new high. It is still capped by key resistance, indicating a post-decline recovery rather than a trend reversal. The market is currently in a wide consolidation range, with strong resistance above and support below. This phase reflects a rejected rebound and a wait for directional confirmation, not a bullish, impulsive structure. From a volume standpoint, the previous decline was accompanied by high volume, while the rebound volume remains relatively weak. This suggests low bullish follow-through, and without sustained volume expansion, price is likely to face rejection and continue range-bound fluctuations. Indicator-wise, MACD has turned negative with converging lines, showing weakening bearish momentum and a continuation of short-term rebound. RSI has recovered to around 60, indicating improved strength, but it still needs to maintain upward momentum. Overall, the market remains in a broad consolidation box without a structural breakout, and the current move is still a weak corrective rebound. Key resistance is at 70,000. Only a high-volume breakout and sustained hold above it would confirm strengthening. Key support is at 67,000. A breakdown could target 65,000 to 64,000, with an extreme scenario revisiting 59,800. For now, it is better to adopt a range trading mindset, not treating rebounds as reversals and waiting for a confirmed breakout above resistance or a breakdown below support before following the trend.